Hey guys, today is Monday, the 1st of August. And like I said in my previous video, I'm going to try and do a lot more shorter videos because I can understand it's a bit draining if you're watching a 10-minute one, let alone a 15-minute one. But I'll keep it down to more important ones or, good opportunities that I see. So, and plus, I don't really have much time these days to do a lot of these. So yeah. So anyways. I did a video last night. I was talking about the Aussie dollar, and I said there was a trading opportunity, at least a day trading opportunity, anyway. Now, this morning, I've had more time to look at the broader market, and I'm noticing something pretty interesting. So, at least the stock markets, anyway. So, and just to cut it short, I think we're going to see a bit of a drop. Okay, now I could be wrong. But if this drop does occur, I think we could see a bit of a sizable drop. Now, again, I could be wrong, but it's something to keep an eye on because, I'll show you what I mean first. Okay, so just look at the Nasdaq. You can see this market's overextended. Okay, we're hitting all-time highs. And I'm just looking at a few indicators. I'm not going to look at every single one, but you can see here we're overbought. All right, volume's pretty pissy. It's low. Got some divergence, so you can see that we're constantly getting low volume. Okay, and yet the market's just constantly moving up. Right. So you got to ask yourself, who's buying? Right? Who's buying? It can't be the mum and dad investors. It can't be your day traders or your retail traders. Right. So it's got to be someone with a lot of money. Right. A lot of money that can push this market up as high as it can on this much volume. Okay. So that's the first question, right? Now this is happening across all the markets. So if I look at the S&P is even worse because you got markets making constant new highs, right? Overbought, low volume, same thing, right? So that's another example there. Now if we look at the IWM, which along with the Nasdaq is a leading market indicator, right? You can see here, right? Same thing, right? There's a bit more volume there, but again, these are risk assets, so you tend to get a bit of volume that comes in here. It's market's kind of overbought. It's still, I consider that to be overbought. But you can see here what I think the IWM is doing is it's putting in a false move, right? So you can see here it's done this, right? Then we come up to there and do this and do that and so forth. And then we break above this key level here, right? So this is indicating to me, right, that we could see more upside, okay? But what I tend to see is that this could be a false breakout, right? This could be the false move that catches out people getting in long, right? It's a bit tricky to pick up, it kind of comes with, a lot of time in the market to see this kind of thing happen. Now, what the false breakout does is it tends to trap these people into getting in long, right? Thinking the market's going to keep going up. But what it does is that when it puts in the false break, it tends to go up a little bit more, then it just reverses like that, right? It's really hard to explain when it happens, right? Like I said, it kind of, more time in the market, you'll kind of pick it up. It took me a while to pick it up as well, but I'm betting that we're going to see this kind of false break. So we could see the market move up a little bit more and then completely reverse, right? Now, if it reverses, we could see a bit of a sizable move, right? Same thing with the German DAX, right? The market did this, right? Consolidated for quite some time, just went sideways, and then and then went up, and we broke out. Well, we almost broke out, not quite, but we there. So again, we could see the DAX move up a little bit more, and then completely reverse, right? ASX 200, same thing, right? It's looking like it's strong. It's going to make new highs. It's overbought. Volume's not too bad, right, considering, but we could see the similar thing, right? There's a couple of patterns setting up too that give me a reversal signal. So what else is there? There's the FTSE's 100. Again, at key reversal zones. So, I'm not sure if this will be a big move, right? But we are due for a retracement, right? Some sort of a retracement. Now, when I'm looking at the economic calendar, I'm looking at, so basically when I'm looking at this, right, like the technicals tell me this is overextended, we're going to see a correction. Now, regardless of what your thoughts are about the market and all that kind of stuff, like the technicals are saying one thing, right? But whether it goes up or down, whether it's a decent move up or down, there has to be some sort of fundamental reason for why it happens, right? It just can't just go down with no news. Now, which tells me that between now and say, tomorrow, Wednesday or Thursday, there's going to be some sort of major news that needs to push the market down, pretty decently, right? I'm not talking about a small little pissy move of like, 50 or 100 points. I'm talking about like a 300 point drop or something like that. Now, I don't know if it's going to happen. I'm just saying, we could see that. Now, when I look at the economic calendar, right, you can see there's really nothing much on, right? Like today, there's nothing at all, right? Tomorrow, tonight you've got the manufacturing data, which is quite important, right? So that could move the market. I don't think it will. And then Tuesday, you've got the interest rate decision, the RBA Aussie interest rate decision, which I don't think was going to affect the whole market. It will just affect the Aussie market, maybe China and so forth, but it's not going to have an impact to the global market, right? Besides that, there's nothing else on Tuesday. Wednesday, there's pretty much nothing besides the Euro ECB non-monetary policies meeting, which again, I don't think is going to move the market dramatically. Well, depends what they say or what the meeting minutes are or stuff, but I don't think it's going to have any major effect. But on Thursday, you've got the pound interest rate decision. You've got a lot of pound news, right? From 9 p.m. onwards, so that could affect the market considering what Brexit did. But again, I don't know. Like, so this is Thursday, and then Friday you've got nothing else really. Well, besides non-farm payrolls, which could be the mover. So non-farm payrolls is on Friday night, 10:30, and that's the payroll data for the US. So this is actually really important. So this could, in fact, be the trigger for a big correction. Okay, now I don't know. When I look at this, right, I'm thinking this is going to be maybe Tuesday night or Wednesday, maybe sooner, right? So I don't think this could hold out to the weekend. But then again, I could be wrong, right? So either way, the point being is that be prepared for a bit of a move to the downside. All right. Now I think we might just see a correction, right? Because the market's overdue for one, right? Whether we see a big move down to all the way down here, for instance, or down here, like I don't know, right? You just have to take profits. If the market does move, be sure to take at least some profits. You don't want to be holding a position and then finding the market whips back up and then losing all your profits. But just keep an eye on it. But I'm pretty sure the ASX is overdue for a correction, right? I've already got a small position in there. The DAX, I'm really certain that they're overdue for a correction. We might see a bit of a move up, a little bit more, and then some downside. But this is one of those times where you can make some pretty decent profits, right? These are the moves you're looking for, right? You're looking for these big moves if you're a swing trader, right? These moves here, right? Because these are the moves that where you can make quite a fair chunk with very limited margin required. Right? So. These are the big moves you're looking for, and you can see that happen quite regularly, right? Every 5 to 6, 10 days, you get a pretty decent move, right? It's about timing the entry and making sure you're getting in with the least risk, and making sure you've got the guts or the balls, right? Not the balls actually, but the control and the discipline to hold the position, right? To make use of all these gains, right? So again, like I said, I think we're going to see some upside here, and then you might see the false break. So you might see a sudden shift down. Now, this could still go up, right? I could be wrong. This could just keep going up. I don't know. But the way things are going and all the news not the news that's out in the mainstream, but if you hunt around, you can't just follow the mainstream media because they don't cover a lot of things. They just really, and even if they do cover it, they really play it down. You really need to research alternative media and search around because I'm seeing all negative indicators, right? I don't see anything that's positive at all, right? And things are just going to get worse. So I don't want to be doom and gloom about it, but you know, it's better to be prepared than not. And if you're one of those unfortunate people that are on my Facebook, you know, my Facebook friends or whatever, then you know you've heard me go on my rants about this. You know, I say that you know, I say that more as a joke, but you know, there's a serious side to it. So, but a lot of people just don't have any idea. Like they don't have any idea that you know they think that things are actually okay. It's far from it, guys. So, you know, it's the market. A major correction is on the cards, right? It's just a mathematical certainty, right? It happens every 7 to 10 years. It's just the cycle of the market. It's just you know it's just everything finding fair value. You know you can see here you got the .com bubble, right? And then that was 2005 here, and then you go up here and you get the 2008 GFC, and then you know, move down, and then since then we've just been up, right? So we're in 2016 now, heading to 2017. So you know we're just due for a correction, at least a minor correction down to you know this level here at least. But I'm guessing that the way things are going, we're going to see a bigger move down, right? I could be wrong, but something to keep an eye on. And if you get in at the right time, you know you play this right, you're willing to take some risk, right? Because this entire market is about taking some risk, right? You can't make money with being conservative, but you know you could be looking at some really nice profits, right? With very little you know initial investment anyway. So yeah, I thought I'd just share that with you. I think we're just due for some sort of correction, all right? So and the way the market is at the moment, you know Brexit is just the start, right? We're going to see some more major kind of events like that, and you know, even a terrorist attack, right? Another terrorist attack, even if it's a minor terrorist attack, you know, you can see the market's already reacting to it. So if you see something like a 9/11 scale type of attack, which I hope you don't see, you know, you could see a big fucking move down, right? So yeah, just keep an eye on that. You know, I'll you know try and update you where I can, but yeah. Anyways, that video went on longer than I wanted it to, but yeah. Leave it at there. Any questions, let me know. Cheers. See you guys.